1.1394, that is the trap point. 2 scalps. 1 swing trade. This is the pre-ECB game plan. Most traders are about to get crushed. Do not be one of them. Stay to the end. You get the exact levels, the hidden divergence, and the headline that flips everything. Write this down now. The euro-dollar is at 1.1416. The session bias is a fade within a range. The daily trend is a strong sell. The weekly trend is a strong sell. The 4-hour trend is a strong sell. But the hourly momentum is exhausted. The ADX is at 18, that is weak. The market is coiling before the ECB. The range is 1.1394 to 1.1475, that is the battleground. Retail traders are overwhelmingly long. Stop clusters sit just below 1.1394. Smart money knows this. The invalidation level is 1.1394. If we close below that on the 4-hour chart, the structure resets. The next support is 1.1355, that is the danger zone. Write that number down. If price breaks 1.1394, the entire bear trend accelerates. A free fall opens. Do you think the dollar breaks 105 this week? Comment yes or no. I am tracking consensus. Just this morning, a pre-ECB game plan flagged massive option gamma at 1.1400, that is the pivot of control. Price will gravitate there. Market makers will defend that gamma flip. Gold is the fear architect. IT is holding above $2,000. If gold spikes, the dollar gets hammered. The euro would bounce. Brent oil supply shock risk keeps the euro pressured. Energy costs bite. This is a classic SMC trading range. Smart money accumulates longs near the floor. They accumulate shorts near the ceiling. Stop hunts are likely. Now let us dive into the technical picture. Here is what most traders miss. The weekly chart shows a bear flag. Price is below every major moving average. The 20-day moving average is 1.1442. The 50-day is 1.1494. The 100-day is 1.1560. The 200-day is 1.1555. Price is far below. Bearish structure is intact, but daily RSI is 44. That is neutral. Stochastic is 54. No extreme. MACD is negative 0.003. IT is curling. This is a divergence trap. The next signal changes everything. On the 4-hour chart, price made a lower low yesterday. But the MACD histogram made a higher low, that is hidden bullish divergence. IT warns of a short squeeze. If the ECB sound hawkish, a gamma flip sends the euro surging. The first resistance is 1.1432, then 1.1437. The pivot is 1.1428. The support cluster is type point 1.1423. 1.1419. 1.1414. That floor must hold. Below it, the trap springs. ATR is 51 pips. That gives us room. The Bollinger Bands are squeezing. Volatility expansion is coming. This is the level that separates winners from losers. Most traders see the strong sell and go short blindly. They ignore the divergence. They ignore the gamma wall. That is exactly where the smart money fades them. Now the fundamental driver. The 24-hour core news is a pre-ECB game plan. Do not get trapped. The ECB rate decision is tomorrow. President Lagarde's tone is everything. The market prices no rate change. But forward guidance on energy risks is the wildcard. Geopolitical tensions in the Middle East are a pressure point. Meanwhile, the US dollar is supported by Fed hawkishness. Fed Chair Warsh hinted at a rate hike before year-end. CPI data next week could lock that in. The divergence is sharp. A resilient US economy versus a struggling Eurozone. Yield spreads favor the dollar. But much of that is priced in. The euro is not collapsing yet. It is absorbing the pressure inside this range. If the ECB delivers a dovish hold, the floor breaks. If Lagarde warns of upside inflation risks, the euro rips. The 1 to 2 week directional lean is cautiously bearish. But only below 1.1394. Above that, we fade the range. Gold's bid tells you that fear is lurking. Brent oil's premium tells you energy is a drain. The cross-asset linkage is clear. DXY at 105 is the pivot for all dollar pairs. A break above 105 and euro collapses. A rejection and euro bounces. Now the trade setups. Most people skip this section. That is exactly where the money is made. Keep watching. I have 2 scalps and 1 swing. All levels are precise. Manage your drawdown. Never risk more than 1% per scalp. Stops are non-negotiable. No positions through high-impact news. This is how you survive. Setup number 1 to the opening scalp. We call it the fast snipe on the 5-minute chart. Wait for a touch of 1.1410. That is just above the support floor, and if price prints a bullish engulfing candle on the 5-minute, you go long, entry at 1.14. 12. Stop loss at 1.1395, that is a 17 pip stop, take profit 1 at 1.1430, that is an 18 pip target. Risk to reward is better than 1 to 1, move stop to break even after TP1 is hit if momentum extends. Take profit 2 at 1.1440, this scalp is void if price drops below 1.1394 first, DO not chased, setup 1. The opening SCLP entry, 1.1412, bullish engulfing 5M, stop loss, 1.1395 take profit 1. 1.1430 take profit 2, 1.1440 risk, reward, (1:1.1 to TP1 invalidation, break below 1.1394 before entry setup number 2, the liquidity grab. This is a counter-noise scalp on the 15-minute chart. Identify the stop-hunt zone below the session low. Session low is near 1.1394. A fake breakout is likely. Wait for a spike down to 1.1385, that sweeps the stops. Then price must snap back above 1.1400 within 2 candles. That is your confirmation. Entry on the close back above 1.1405. Stop loss at 1.1380, that is a 25 pip stop. Take profit is the nearest intraday liquidity pool. That is 1.1428, the pivot, target 23 pips. This is a fast scalp, requires rapid execution. If price fails to reclaim 1.1400 quickly, the trade is dead. Setup 2, the liquidity grab entry, 1.1405, after reclaim of 1.1400, stop loss, 1.1380 take profit, 1.1428 risk, reward, (0.9:1 invalidation. Failure to close back above 1.1400 within 2 15M candles. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Setup number 3, the session swing. This captures a multi-session move. Bias is bearish, aligned with the daily trend. But we wait for a trigger, wait for a 4-hour close below 1.139. 4. That confirms the breakdown, entry on the close or a retest of 1.1394 as new resistance, entry at 1.1390. Stop loss above the daily structure at 1.1430, that is a 40 pip stop. Take profit 1 is the major psychological support at 1.1355, that is a 35 pip move. Take profit 2 is a stretch target at 1.1300. Once price reaches halfway to TP1, move stop to break even, then trail the stop by 20 pips. That if ECB surprises hawkish and price reclaims 1.1480, the swing is invalid. That level would flip the medium-term outlook. Setup 3, the session SWNG entry, 1.1390, for H close below 1.1394, stop loss, 1.1430 take profit 1, 1.1355 take profit 2, 1.1300 risk reward, 0.875:1 to TP1, extended 2.25:1 to TP2 invalidation, for H close above 1.1480 risk management pulse, never risk more than 1 to 2% per trade, scalps demand even tighter risk. No positions through high impact news, stops are non-negotiable. This is how you survive to trade the next big move. Keep your drawdown under control. Point 1. Bad trade must not erase a week of gains. Gold traders manage fear, you must manage risk. Now the close. The single most critical level for tomorrow is 1.1394. If it breaks, the monthly trend flips to freefall. If it holds, we test 1.1475 tomorrow. The ECB statement drops. I will have the updated blueprint right here in 24 hours. If that level breaks, the whole structure resets. The next video will map the fresh targets. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis and then loop back to today's Nasdaq Gamma flip later. Tap the link at the top of this channel's homepage. Subscribe to this channel for daily euro-dollar coverage. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. Scalp the noise. Swing the trend. That is the edge. See you before the next explosive move.